It wouldn't surprise me to see silver take 2 years to break out relative to gold. The gold price moves relative to people's faith or lack of faith in the maintenance of their purchasing power in fiat currencies, primarily the U.S. dollar. If the U.S. dollar declined by 75%, it suggests that the gold price could move up fourfold. Will it be threefold? Maybe.
One of the things that's had me scratching my head on this breakout, and silver going up to 37, and platinum is actually outperforming even copper. Platinum, last I looked, was up over almost 55% this year. Has gold gone too far? Is it time for some correction? It is actually, as we speak, correcting somewhat. We're certainly down from 3,500 to under 33 last I saw.
Rick Rule's perspective on silver's potential breakout timing, ranging from as early as this fall to potentially taking up to 2 years relative to gold, aligns with the historical patterns he's observed in precious metals cycles. Rick Rule discusses key drivers for gold and silver in 2025. They emphasize central bank buying, Eastern demand, and the erosion of purchasing power as significant factors for gold, which supports their thesis about gold's price movements mirroring U.S. dollar deterioration. The silver price movement to $37.35 with a 0.71% daily gain, as mentioned in your analysis, demonstrates the metal's participation in the risk-off sentiment while still being constrained by the resilient U.S. dollar. The greenback strength near 2-week highs, partially supported by the stronger-than-expected jobless claims data, creates the exact market dynamic that Rick Rule has been monitoring. His observation about gold potentially increasing fourfold if the dollar were to lose 75% of its purchasing power provides context for the current gold price movements near $3,335 per ounce. The renewed demand for precious metals following the wave of tariff announcements, including the 35% duty on Canadian imports effective August 1st, exemplifies the safe haven dynamics that both Rick Rule and other analysts have been anticipating. The mention of over 20 tariff-related letters being issued in a single week reignites concerns about global trade slowdowns and economic growth, which historically have been catalysts for the precious metals breakouts that Rick Rule has been positioning for. This environment of heightened global uncertainty creates the backdrop for the silver breakout scenario he describes, whether it materializes in the near term or takes the longer timeline he suggests. Before we dive into this video, please like and share it. Don't forget to subscribe to our channel and hit the bell icon to stay updated.
My thesis is that the gold price moves relative to people's faith or lack of faith in the maintenance of their purchasing power in fiat currencies, primarily the U.S. dollar. I believe that as a consequence of our debt, our deficits, and the unsustainability of our entitlement program, arithmetic unsustainability, that the U.S. dollar will lose 75% of its purchasing power over 10 years, just like the decade of the 70s. I suspect that the gold price will more or less mirror the deterioration in the purchasing power of the U.S. dollar. Arithmetically, if you believe that there's a causal relationship, if the U.S. dollar declined by 75%, it suggests that the gold price could move up fourfold. Will it be threefold? Maybe. Will it be fivefold? Maybe. What isn't in dispute to me is that absent a real sovereign default, the U.S. dollar has to lose 75% of its purchasing power to make the on and off balance sheet obligations of the U.S. government serviceable. I suspect that the deterioration of the dollar relative to other currencies will begin to subside. I think that people have been selling the dollar reflexively because they don't like our president. I don't like our president either, but I haven't been selling my dollars relative to other currencies. I think that in a relative sense, which is to say relative to other currencies, the U.S. dollar will do okay over 10 years. I think U.S. hegemony will decline. Doug Casey described the dollar once relative to other currencies as the prettiest mare at the slaughterhouse. And so I would suspect over 10 years, relative to the Canadian dollar, relative to the euro, relative to the renminbi, the dollar will do okay. But in an absolute sense, what you buy with $1,000 today will cost you $4,000 10 years from now. In an absolute sense, it'll do poorly. In an absolute sense, your audience is going to hate me for this, but the Canadian dollar will do a little worse. It wouldn't surprise me to see silver take 2 years to break out relative to gold. It also wouldn't surprise me to see it happen this fall. All I know is that silver doesn't move until a generalist investor comes to the precious metal space. The generalist investor comes to this precious metal space because of momentum established by gold. When that happens, I don't even know why. I suspect it's because of the lower unit cost to buy silver. But when it happens, it's truly truly, truly dramatic. I've seen it happen 3 times before in my life. And Charlotte, it's been pleasant. If I have to wait 2 years for that circumstance, I've been on Earth for 72 years. I'm okay with 2 years. But those moves are really, really, really dramatic. And silver has substantially lagged gold in terms of this move, as it always does in a bull market. It depends on who you are as a speculator. There are some people that have trauma holding a position over a long weekend. They should do something else, buy bonds or something, If you're a speculator, and if you are a speculator who can tolerate perturbations, volatility, if you can tolerate for a time boredom, the setup in silver from a speculative point of view, using history as a guide, is spectacular. The nominal highs for silver are $50, but that isn't the real high because the purchasing power of the dollar is deteriorated. If you did constant dollars, the previous high is probably $80 or $85 an ounce. And I would expect personally that silver handily takes out those prior all-time highs.
Lobo Tiggre recently commented on the surprising breakout in silver and the even more impressive rally in platinum. Silver approached $38 per ounce, while platinum has significantly outperformed with a year-to-date gain of nearly 55%, a remarkable move even by volatile commodity market standards. Silver prices climbed above $38 per ounce, reaching their highest level in over 13 years as intensifying global trade tensions fueled demand for safe haven assets. The rally came after U.S. President Donald Trump announced a 35% tariff on Canadian imports starting August 1st and signaled plans for blanket tariffs of 15% to 20% on most other trading partners. These developments contributed to increased investor interest in hard assets and helped fuel the broader rally in precious metals. Gold typically leads the charge in a precious metals rally, with silver often catching up later. The key question now is whether gold has gone too far too fast and if a correction is due. Gold has already started correcting somewhat, slipping from around $3,500 to below $3,300. Gold prices extended their decline during Wednesday's Asian session, breaking below the $3,300 level for the first time in over 10 days. Spot gold dropped to $3,294, pressured by a stronger U.S. dollar and rising Treasury yields, both of which were buoyed by renewed inflation concerns stemming from proposed U.S. trade tariffs. The same tariff-driven inflation concerns that fueled the rally in silver are now contributing to downward pressure on gold, demonstrating how interconnected and sensitive the precious metals markets are to global economic policy shifts. Let's get back to the interview.
But I can see it happening for gold first, which is no surprise to a long-time silver bull, right? Gold moves first and then silver catches up later, right? I'm not saying anything new. Well, I guess the crux of the question now, though, is, well, has gold gone too far? Is it time for some correction? It is actually, as we speak, correcting somewhat. We're certainly down from 3,500 to under 33 last I saw. And my answer to that is, don't forget the money helicopters. They're still there. I doubt we would see a really big correction. I mean, it's interesting to think, gold could drop $1,000 an ounce and it would still be 2,300, which is a higher price than all the gold mines in the world operating today were built assuming, right? The mines out there today, they were built, Barrick back in the day, they were modeling on 1,200 and I think they upped it a bit. But a couple of years ago, assuming $2,000 gold would have been extremely an aggressive price assumption. That's $1,300 below where we are right now. So the actual business of mining gold is just printing cash right now. And if you're an explorer with a project of merit or a developer with a feasibility study, and that study is, even if it's just a year old, it's going to have a price assumption that's more than $1,000 below current prices. And it's not just this flash today spot where, here we are in July and we've been north of 3,000 for the better part of the year. Not all year, but the better part of the year. So this is really significant. So what I'm saying is, all paths lead to inflation. I'm very bullish on gold. Can it correct more? Yes, no doubt. Does it really matter in the scheme of things? No. I mean, what it matters is that I think it creates a buying opportunity. Like what I'm saying is I'm not worried about gold going down, not down for the count. One of the things that's had me scratching my head on this breakout and silver going up to 37 and platinum is actually outperforming even copper. Platinum, last I looked, was up over almost 55% this year, year to date, which is, even by volatile commodities market standards, that is a huge move. Uranium 2 years ago, maybe more, but anyway, but they're very different. Silver is a monetary metal, which, sorry, platinum really isn't, and let alone palladium or rhodium. But silver also, it goes into the solar panels. Platinum doesn't. Platinum is an automotive industrial metal, goes in the catalytic converters. So it is a bit weird to see them moving at the same time. And you could even think, platinum gas cars, silver electric cars, or more related to the green energy, right? Maybe even contra-cyclical to each other. And so to see them moving at the same time was interesting. It was almost like a month ago, the memo went out and people just started buying any expensive silvery metal because that's what was moving. But since then, they've actually diverged a bit. And platinum and palladium have continued rising, and silver, and oddly enough, rhodium, have gone more sideways. And so I'm actually at the point where I think it might have been a coincidence because the markets are different enough. Not entirely, but if it's something about Russia threatening the supply of platinum and palladium, that really wouldn't affect silver the same way. Like, there's no reason for that news to move them at the same time, other than perhaps just like sympathy. Precious metals are moving. Well, I'll buy anything silvery. Not a good thesis. So where does this leave us? There's talk about, because gold is so high, and I know we'll get there, but because it's so high, Chinese consumers are going with platinum jewelry. I can't confirm that, but I'm not sure if that's true. I'm not sure how durable that is, because if you're wearing a pure platinum chain, it looks like, to anybody who's not an expert.
With silver poised for a potential breakout and gold reflecting long-term concerns over fiat currency devaluation, both metals appear increasingly attractive amid economic uncertainty and geopolitical tensions. The resilience of the US dollar may temporarily cap silver's gains. Still, structural issues like mounting debt, inflationary pressures, and trade disruptions suggest a strong bullish case for precious metals over the coming years. As investors seek safety and value preservation, gold and silver remain critical assets to watch. What do you think about silver's potential breakout and gold's role in preserving purchasing power? Share your thoughts in the comments below. If you found this video helpful, then share it with your friends and don't forget to like and comment on it. Be a part of our community by subscribing to our channel and by hitting the bell icon. Thank you for tuning in.